All right, mic's already on. Thanks. Thank you so much for the very kind introduction. It's very exciting to be here. I think we have two very exciting days ahead of us. I'm sure I'm going to learn a lot. I just said in the few people that I talked to before this, I'm a little selfish because I'm coming in, I'm essentially talking about what I want to learn about, right? Also, I want to give you a little bit of information about AI and banking, but also I'm here to learn, so I'm very much looking forward to also get to know all of you and learn about the exciting things that you do. So it's early in the morning on the first day, so let's get started. You've probably gathered by now that I am a data scientist working in banking. And now some of you are probably thinking, wow, that's so exciting, Max, please tell us more about it. And some of you might think, you know, that poor guy, he's probably programming in COBOL on the mainframe. I can assure you that's not the case, but fair question. So why does a data scientist decide that banking is the industry they want to work in? Why is banking exciting for our profession? If I had to formulate a mission for my talk, I would even say, I want to convince you that not only is banking an exciting industry for data science, in my opinion at least, it might be the most exciting. So why do I think that is? Let me take you on a little thought experiment, right? So what we do as data scientists is we create insights from data. And that insight might be an analysis, it might be a statistical test, or it might be the prediction of an AI model, right? But since we work in businesses, this is the enterprise track, we need to transform that into the business. We need to bring it into the business that we work in and improve the bottom line, right? And vice versa, information from the business, from the processes, from the product, needs to be fed back in the form of information, in the form of data, in order for us to be able to create those insights in the first place. Now, banking is a mostly virtual business. We just talked about it at the table. And now some of you might say, hold on, Max, I just applied for a loan with my bank and I had to fill out this huge stack of paperwork. How is that virtual? Fair enough, not all processes are as paperless as we would like them to be yet. But, of course, what I mean, there is no physical product in banking. That stack of paperwork is not the product. It is just a representation of the virtual contract between you and the bank that says you get some money today and you're going to have to pay it back later with interest. So in a mostly virtual business, it appears to me that that distance between the insight and the business should be as short as possible, right? Because the insight doesn't have to transition into the physical world as we have in aviation or in chemical manufacturing, where you have to go from the virtual insight to the physical product, to the manufacturing line, and back. If that was the only thing you knew about AI and about banking, you would say, that's great, so AI and banking should be a done deal, right? But when you look in reality, that's actually not the case, quite the opposite. There's many studies about this. I pulled up this recent one from Accenture that essentially says we compared 17 industries and banking and capital markets ranks dead last in terms of AI maturity. So it seems that there is a big discrepancy between the potential that you have in banking for AI and the current state, the current maturity. And that discrepancy, I think, is the reason why it is so exciting to do data science in banking. Because that discrepancy for us as data scientists can only mean one thing, that there's going to be a lot of exciting and fruitful work to be done over the next couple of years. Let's take a step back. I don't think I have to tell you very much about the bank that I work for. We are one of the largest banks internationally. We have an international investment banking franchise, an international corporate bank, a private bank, and with DWS, also an asset management branch. We employ over 80,000 people worldwide, have a 1.3 trillion, that's trillion with a T, balance sheet, and we are active in over 50 countries in the world. None of that is probably news to you. What might be news to you is that we have recently finalized a strategic multi-year partnership with Google Cloud. And that partnership is not only about helping us transition into the cloud, it is also about us co-innovating with Google Cloud on products and services. And I think over the next 2 days, we're going to talk a lot about infrastructure as well, that we need to do deep learning. So we're also going to talk about cloud. And so I'm letting you know this because it is the first of its kind, this partnership in the financial services industry. It was just mentioned, data is the new oil. So the first question we ask each other, so what kind of data do you have? And again, for banking, the answer is quite encouraging because essentially all banking business is data. There's hardly anything else. Let's start with something concrete. Let's start simple. Let's start with client data. Now, everyone has data about their clients, obviously. If you don't have data about your clients, I would even argue you might think about whether they're even your clients. So in banking, we tend to have just a little more data about our clients. And there are good reasons for that. The first one is that very often it's even a regulatory requirement for us to gather quite a bit of data about our clients. The minute a client wants to bank with us, by the way, when I say client, don't necessarily think you and me, but think more like businesses. You know, from small businesses, the dentist down the road, to multinational corporations. So the minute a client wants to bank with us, we have to learn a lot about their business. That's a requirement. And the reason, obviously, is that we need to make sure that they're not using our products and services for illicit purposes. And the second reason is very much selfish. Obviously, our business is based on trust. We give somebody money today, and then we want to make sure that they're willing and able to pay us that money back later. So we had better make sure that we ensure that they're actually willing and able to do that. In order for that, we have to gather data. It doesn't stop there. Once a client starts using our products, just necessarily by the nature of the products, more data is generated. Think of the simplest case. You use an account, you send money to someone. Obviously, there's going to be data. There's going to be a record that needs to be kept. Think of that big stack of documents that we just talked about. That is also data. It is a representation of the virtual product, the agreement between us and the client. Another space that we operate in are the capital markets, and a lot of what is happening in the capital markets, by the nature of the regulations around it and by the nature of the participants, is going to be public. So many times there's going to be a regulator that says if you're doing a certain thing in the capital markets, you're going to have to publish certain information about this. Even if you want to be active in that space at all, think about public companies. They will have to publish detailed financial filings every quarter and think about and tell us about their business that they're doing, tell us about their finances, and so on. And obviously, all of that data is available for us as well. Additionally, since these entities don't operate in a vacuum, ultimately they're operating in the economy, in the society that we live in. There's going to be other parties that are interested in what these entities are doing, what corporations are doing. So they're gathering information about it, they're forming opinions about it, and they will publish that in form of news, in the form of opinions, in the form of analysis, and all that data also is available to us. That's something you can hardly say about, private clients. You can Google a private client, you can Google me, but how much is that going to give you? There is another thing that I want to mention that I think is particularly exciting, and it's not a new set of data per se, but it's a different way of looking at the data that we have. And all of the things that I mentioned, all of the products, by their nature, are something that happens between entities. It's not just one entity doing something for itself. It is always entities interacting with each other. Every financial product, is something that happens between entities. So if you realize that, then suddenly your data becomes a network. And suddenly all the data and all the information gets so much more rich because you can reason about neighboring structures in that network, and you can reason about entities that you might not otherwise even have that much information about. So what do we do with all that data? What are use cases? So you have a lot of use cases in banking also that are very similar and that you're going to find in other industries as well, and that are going to be essentially the same. And those are primarily the use cases that are where you today have manual work involved that is tedious and error-prone and expensive, and you want to automate your process automation. And I would wager they look very similar in banking to use cases of the same type in other industries that we have here today. And then there are going to be use cases that perhaps sound very similar to something that you are doing or that others are doing, but I would think in banking they're kind of a little bit of a different animal. And I think a good example for that is something that I spent most of my time in, which is client insights and personalized marketing. So the question of finding the right product for the right client at the right time, that is something that everyone cares about that is selling anything to anybody. And we know how to do that data-driven and AI-driven. We all know Amazon, where you have, where you go on the page and it says, customers like you bought this toothbrush. We thought you might also like this piece of luggage, right? So, and you want to do something similar in banking, but I would say just by the nature of our clients and by the nature of the products we sell, if we went to a multinational corporation and told them, look, we're seeing other clients are issuing bonds, why don't you also issue a bond? We would get some disappointed looks, I think. I don't think that's enough. On the other hand, if we go out and if we look at all the data that I just showed you earlier, and we form an educated opinion about the needs of this company at the specific time, about the market they're operating in, about their competitors, and we told them, because of all these reasons, we think that now is the right time to do something, then I think you have something. So how does the data science practice look in banking? And I guess it's similar to a lot of other industries. We are quite comfortable now with classic machine learning models and with off-the-shelf models. Think your OCR models that are trained for a specific purpose and you just take them and use them for that specific purpose. I don't think we've exhausted the potential of these classic models and methods just yet. I think there's still a lot to be done there, a lot of exciting use cases. But obviously, as data science practitioners, we think about the next step, and we want to expand our tool set. And when you venture into deep learning, what is the first thing you do? You try to do transfer learning. You try to take what others have trained and what others have built up, and you want to apply it to your circumstances. A big example of that, obviously, are the deep NLP models like BERT. You take all that text understanding and then you apply it to your individual use cases. And the second is you have certain blueprint architectures that work for a specific type of data. If you don't have pre-trained models, that's typically where you go. Now, what is the step after that? What do I think is going to happen in banking? What do I think is going to become important in the data science practice in banking? I think what we're going to see over the next couple of years are very domain-specific models in certain areas. Why? Because once you start doing transfer learning, your competitors are going to do the same thing. And suddenly, you're all competing for the same insight, but the whole street has the same BERT model that they're just transfer learning on. So they're all getting the same insights as you, and you don't have an advantage anymore. So the only way to gain an advantage is to A, add more or better data, and that might not be possible. Or B, you make your model better. You make it more fine-tuned. You make it more specific to the individual use cases. And the second thing is that I think is going to be very exciting for us is I talked about networks. I talked about network data. Understanding our data as networks is the first step. And then the second step, obviously, is we need to utilize models that are able to extract information natively from that network structure. And I think we have these models. I think graph convolutional nets, for example, have been around for a while. But applying them in banking is going to be a very, very interesting next step. Let me take the last couple of minutes to talk about, what I think are the necessary pieces of the puzzle to close that gap that I talked about. Between the potential that we see and the current adoption. So by the nature of our business, the decisions that we make in banking have substantial influence on individuals, on businesses, and the economy as a whole. So when we, for example, grant or reject a loan application, that has implications. When we execute or not execute a transaction, that has implications. So it's only natural and right that the regulator, our clients, and also our shareholders demand that in whatever we do, we are 100% compliant, we are 100% transparent, and we are as stable and reliable as we can be. So how can we make sure that we're living up to that in the adoption of AI? So when we use AI models, that we fulfill these demands. I think one important piece of the puzzle is going to be trustworthy AI. Think of these decisions that I mentioned. I think in these cases, we need to make absolutely sure that when we employ an AI model for these decisions, that we make sure it's making the right decisions, even under very extreme and rare circumstances. We can't leave that up to chance. It's not just a number on the balance sheet that might have the wrong sign, but it's actual implications for individuals, businesses, and the economy as a whole. And the second point is the operation, MLOps. And I think we're going to talk a lot about that. And I would love to learn more about that, because I think it's so important for us. Because when we deliver a model today and we see it's working well, obviously we need to make sure that it's working just as well in a month from now, a year from now, or 5 years from now. So I'm going to stop here, and I think we have some time for Q&A.